We have had an abundance of fantastic markets to trade so far this year, and these charts contain two of these examples. On the left, we have the Australian dollar versus the Japanese yen. On the right, we have Bank of America. If we look at Aussie yen, we have seen great cyclicity, great repetition in its cycles. If you look at the momentum we have and the price action, the follow through, particularly in those upswings, much shallower retracements, typically consolidating as well just before we build, so we get good repetition in those cycles, giving us a really nice structure to trade. If we look at Bank of America, building nicely in a long-term continuation pattern within a strong uptrend and breaking nicely from that with strong volume as well. You can see volume increasing here from the accumulation distribution indicator as we break out, and see a fantastic follow through in that move. Now, it's easy to look back in hindsight and say these were great markets to trade, but the reason why these were great markets to trade, the reason why I want to show you them, is because they've actually been behaving in a very predictable manner. They've been following a predictable path. They've been doing what they should be doing. How I know that, if I just show you an example here, if we look at the Australian dollar, Japanese yen example, the orange line here is this 20-year pattern. This tells us the path that Aussie yen price action should take. And our algorithms have identified periods. You can see these periods at the bottom where they are the optimum times to be buying these markets. Now, the key thing is here is we want to trade a market if it's following its predictable path. And we can see that it actually is. The orange line is the 20-year pattern. And if we look at the top here, this shows an 85% positive correlation. That's current price action has an 85% positive correlation with this pattern. And if I just turn on the current year price, so this yellow line here is the actual price action of this year. And you can see exactly just like the 85% positive correlation is showing, Aussie yen is following a predictable path. And the periods where the algorithm has identified as the optimum times to be long in this market have been exactly the times you want to be long in this market. And that's why when we look at these examples, the early February, whenever we typically see that momentum to the upside in Aussie yen, as well as early March, we see that momentum to the upside. The reason why that has been a good trade is because it's been following a predictable path. It's much easier to trade a market that's behaving predictably. It allows you to anticipate what it should be doing. Should it be breaking out to the upside? Should it be building here and pushing to the upside again? And if a market is following a predictable path, it's much, much easier and much higher probability to actually trade those markets. Same with Bank of America. This was a great market to trade because it was also behaving predictably. We see this break to the upside as we go through the end of February. And if we switch over to the Bank of America chart, you can see again, this is the all year pattern this time. And you can see we've got a 76% positive correlation. And again, if I turn on this year's pattern so far, you can see we've seen that momentum to the downside. We had this consolidation just as we were breaking out, as we just seen on the chart, breaking out right ahead of the optimum period to be long in this market. You can see that optimum period from around the middle of March can actually run through pretty much to where we are now, early April, maybe even as far as May. Every market has a path that it possibly could follow, but not all markets will follow their path. It's the ones that are following the path and behaving predictably that we want to be trading. So how can we do that without looking back in hindsight? If we look on our platform, we're looking for markets that have a strong positive correlation with their predictable path. And particularly if we go back and we can look at some completed ones. If we go back into last month, we just seen the Bank of America one. That was the one of its optimum patterns. We know it's got a 76% positive correlation. And if we look across the path as well, we've got another one here at 83% positive correlation. This is the election pattern this time, but again, it's the pattern that it's following. It's got the strongest correlation. This was actually a market that was in a strong move to the upside, but typically we see a peak here in the early March and we see that move to the downside, and that's exactly what we have done. That pattern has been completed. Moving, I think there was a few more in there. Yes. JP Morgan. Again, a nice move predicted to the upside. We have this time in the all year pattern again, an 83% positive correlation. It actually broke a lot earlier than what we would typically associate with this pattern, but it's behaving really, really well. Typically a nice move we see through March and into April, and that's exactly what we have done. So you can find markets that behave unpredictably. These markets here with the negative correlations, they're not following a predictable path. So there's lots of markets that won't follow their path. It's the markets that are following a predictable path we want to trade. Again, here, Progressive, following a predictable path. Its correlations all strong right across its patterns. Actually, this is the 20-year we're looking on with the orange line, 92% positive correlation. Strong move to the upside as expected through Feb, and multiple patterns through March and into April. So again, following a predictable path, doing what it should be doing. And again, I'll say there's lots of markets that won't be following their path, but we have made it really easy to identify markets that are. All of these correlation values, you can see on this table as well, the markets with the strongest correlations, those markets are going to be the easiest to trade. That's where you're going to find it much easier to make money, because you can then spend your time doing your technical analysis, looking at the price action on the structure, on markets that you can anticipate doing what you want them to do. So your time can be better spent executing great trades on markets that are actually behaving and doing what they should. So to recap, focus your time and effort in identifying and trading markets that are following a predictable path. Use our platform and look for markets that have at least a minimum of a 50% positive correlation with one of their expected patterns, whether it be the all years, the 20 years, or the election years. Then you can use your technical analysis to time the entry, look for confirmation, look for price action that agrees and tells you the move that you're anticipating is developing the way you've expected it to develop, and that move is now underway. This will make sure that your focus is always on higher quality markets, higher probability markets, and you have a much greater chance of a market performing in the way that you're expecting. I hope this helps, but if you have any questions, drop them in the comments or drop us an email and we'll be more than happy to get back to you.